Step into the captivating world of Paul Tudor Jones, the most watched and talked about man on Wall Street. A name synonymous with savvy stock trading, extraordinary wealth, and an unmatched ability to navigate the financial markets. In this compelling account, we'll take you on an exceptional journey through the life, career, and strategies of a man who's made an enduring impact on finance. Paul Tudor Jones was born in 1954 in Memphis, Tennessee. In 1976, he received his degree from the University of Virginia. While in college, he wrote under the pen name Paul Eagle for his father's local business newspaper, the Memphis Daily News, to support himself. Jones got admitted to Harvard, but rejected it. He contacted his cousin to ask about the fundamentals of trading. Dunavant, his cousin, then sent Jones to Eli Tullis, a New Orleans-based commodity dealer. In the late 1970s, Jones was caught trading cotton futures on the New York Cotton Exchange by Tullis, an experienced dealer representing cotton traders. Jones had developed his abilities to the point where at age 24 he could trade commodities. Paul Tudor Jones established Tudor Investment Corporation in 1980. It's still his primary source of income today. One of his most outstanding accomplishments was correctly anticipating the 1987 stock market meltdown, which allowed him to make $100 million on that crucial day. Jones has recently been more involved with philanthropy. He founded the Robin Hood Foundation, a nonprofit organization, in 2013 to eradicate poverty in New York City. During the COVID pandemic, Jones said that he used 1% to 2% of his fortune to buy Bitcoin as a hedge against inflation. He made this investment as the coronavirus epidemic was projected to cause central banks to expand the money supply to boost the economy. Jones' primary source of wealth creation is Tudor Investment Corporation, a hedge fund he established in 1980. The company, which focuses on interest rate changes in the foreign exchange market, presently oversees assets worth around $11 billion. The hedge fund has had fantastic success with an average yearly return of 19%. Jones' close collaborator, Tommy Robbins, claims that the fund continuously makes money and has been successful for the past 20 years. The 1987 stock market crisis, popularly known as Black Monday, was when Paul Tudor Jones experienced his most tremendous success. Global stock markets fell on that momentous day. Jones anticipated this crisis, and by taking short bets and offloading futures contracts, he quadrupled his fortune. Jones won a 125.9% return on his bet that the market would fall, or $100 million daily. According to Forbes, Paul Tudor Jones presently ranks 316th among the world's wealthiest people with a net worth of $7.3 billion, according to the publication's real-time list of the world's richest people. His net worth has risen a lot after the financial crisis in 2008. Investments and the portfolio of Paul Tudor Jones keep an extensive portfolio of assets. Tudor Investment Corporation invests in various markets, including real estate, information technology, healthcare, utilities and communications, finance, consumer discretionary, and now also Bitcoin. He has at times had several hundreds of equities and holdings. It's hardly surprising that Paul Tudor Jones has expanded the diversification of his holdings by investing in cryptocurrencies. He stated that he invested in Bitcoin in 2020 and currently has a small proportion of cryptocurrencies in his portfolio. In Jones's opinion, cryptocurrency is a better inflation hedge than gold. As part of his trading method, Paul Tudor Jones uses a variety of strategies to spot market opportunities. Several of these methods include technical analysis and mass psychology, which include forecasting future market prices by examining previous price patterns, are the foundation of Jones' trading method. He argues that human emotions drive market fluctuations and have a tendency to repeat themselves. He looks closely at past market data to find patterns that might be utilized to predict future price changes. His precise forecasting of significant market crashes shows this method's effectiveness. Paul Tudor Jones and his co-worker Peter Borish linked the market during the 1987 stock market disaster to the circumstances before the 1929 stock market crash. They could perform one of Wall Street's most impressive moves because of this investigation, which found startling connections. Perhaps his favorite indicator is the 200-day moving average. Jones said in an interview with the famous trend-following writer Michael Cavell that this simple indicator is the metric that starts all his research. Why is this? That's because the 200-day moving average has worked very well to filter bullish and bearish market regimes. It keeps you out of trouble and avoids many nasty drawdowns. We assume that Paul Tudor Jones' trading strategy is a bit more sophisticated than just this filter, but it shows that even the simplest things can contribute. For example, this filter flashed a sell signal just days before the Black Monday in 1987. Another example is when the 200-day average avoided most of the bear market from 2000 to 2003. A sell signal flashed again in early 2008 and would have kept you out of the market until the summer of 2009. Now, in the last example, you can see some false signals. This is not a guaranteed indicator, and you must expect whipsaws. But the examples here are not cherry-picked. If we apply the simple rules of buying S&P 500 when it closes above the 200-day moving average and sell when it closes below, we conclude that the 200-day average strategy has performed just a tad worse than buy and hold S&P 500. However, you would have got that result by suffering a lot less along the way. Max loss was 26%, while buy and hold suffered a 50% loss 3 times during this period, as seen on the left chart. On the screen, you can see the performance of the 200-day average filter on the right. But Jones also strongly believes in global macro trading, which is taking positions in international financial markets based on societal and governmental changes. He believes that this tactic offers the best chance of generating profits. This mindset has been crucial in his most extensive and successful deals. Jones prefers to use the futures market instead of the stock market when using this method because he thinks it offers more liquidity and better hedging options. Jones practices active money management, which involves closely observing the performance of a portfolio of investments and promptly deciding whether to acquire, hold, or sell assets. The goal is to beat typical stock market returns and profit on transient price swings. This method is part of Paul Tudor Jones' trading strategy since he carefully monitors his holdings to guarantee their success. He immediately sells off underperforming assets and looks for other ones to invest in. Paul Tudor Jones is undoubtedly one of the best traders on Wall Street. He rose to popularity after earning over $100 million after the Black Monday crisis due to his successes and adept risk management, an area where many traders struggle. He's made a reputation for himself by persistently pushing the limits of success, driven by a hunger for challenge and competitiveness.